Hi everyone, welcome to the show. Welcome to Daily Purdia Capitals Before the Bell. So today is our big FOMC day. We're waiting to see what's going to happen in about 1 hours. So yeah, let's take a look. What happened overnight and what is happening today. So basically, one of the big news that were announced over an hour ago, Trump stated that the MOU is not final, as you can read here. So we've been talking about it, that it's not yet final. The signing is planned to happen on Friday, but as you all know, it can happen at any time, one point in time. Hi, Steve.
Hello, hello.
So yeah, guys, be aware, as we already mentioned, that as long as nothing is signed and agreed upon from both parties, that the market will probably stay volatile. And even after the signing, it will most likely, at least in my opinion, being not a smooth ride till they figure out all the differences they have. So this is one main topic, and the second one is the upcoming FOMC. The new Fed chief, Wash, will be probably will decide upon what will we see: rate hike, rate cut, or hold. My personal opinion, it's most likely going to be a hold, but just my personal view. Steve, what's your take?
Well, first I want to say happy FOMC. It's a big day. New chair on the podium. So yeah, it's a big day. And that's the thing about markets. We always have something fresh that comes up, every given day, every given month, quarter. And yeah, like it's never gonna be boring. It's always gonna be exciting. But then again, yeah, we want to make our trading boring and calm, but of course the news will always be exciting and drive the dopamine and that emotion. And yeah, there's not much to talk about. I feel like until the news hits, market might be calm, consolidate. Like you see, yeah, we have some news on Trump. Trump also speaking. I think at New York Bread and New York Open. So yeah, we have just a flurry of news incoming. Not much to say right now until everything comes in. We also have core retail sales coming in about around 10 minutes.
Yeah, but I think if those will be not completely out of line, at least I think the Wall Street is not expecting much from those. At least it's not like a complete outline. Yeah. What's your take on the FOMC? Do you cut?
No, I think they'll remain steady. His first meeting, so he might not do anything wild, but I feel the most important thing is once he speaks, like the rate itself, of course, yeah, we're gonna get some volatility once at 2 p.m. the news comes out, but the real kicker will be once he starts speaking, he comes on stage, what his tone is, how the market reacts to his tone. Because yeah, for how long now has Jerome Powell? Over 10 years.
Yeah,
He's
quite a
been
while.
speaking, making the market move. So yeah, like obviously we can't really dissect it word for word. What I'm gonna be looking for is just reaction points and then possibly setting up those levels for next day. I don't actually trade FOMC myself, but we can get into the mindset how to avoid the traps leading into FOMC. Because usually, yeah, if my setup is fully I wouldn't say, because of course I could always trail, I could always hold for longer, but if my profit target and my trade idea is about 80-90% met and we're leading into FOMC about a few minutes, I always cut it off. I'm not risking my position. I'm not risking the funded accounts. But yeah, we can get into the mindset of that and how avoid the traps, avoid the velocity of FOMC, and how to protect yourself and your prop accounts. And of course, if you want to trade afterwards, watch him speak, see those entry points, sure. But to gamble, hold your position right on the rate decision, it's, no financial advice, but highly not recommended. But then again, it's everyone's own prop accounts. It's your responsibility. You guys are your own independent traders. Let's call ourselves independent traders. Anyway, instead of retail traders. I watched an SMB podcast the other day, and he said majority of traders are actually independent. Sounds better than retail. Retail is usually when you have no idea what's going on, completely beginner. You don't even know what a contract is. You can't even measure what a lot is on the FX side. How the markets move, bullish or bearish, those are retail. But if you have a good grasp on things, you made profit, you've had payouts in the past, then call yourself an independent trader. What do you think?
I think retail is really common, like in the common sense how I see things is retail really like the mass influenced through social media, right?
Yeah.
It's basically always one directional, driven by the narrative, always either long or short. Either it all collapses and then everyone is short, and either it goes long only and then everyone is long. So yeah, I can agree upon that.
Yeah. But if you've had the experience, and if you've gone to that payout stage, then you could say, yeah, start calling yourself independent trader, get away from the retail, start speaking and acting more professional. I think that's the key.
Yeah, I think that's the biggest misconception, right? That people want to be independent and professional, but they don't behave this way. So nobody makes a deep dive preparation. Only few of the people have a proper back-tested strategy that they trade day in, day out. And I think that's the biggest risk what people experience. And I just want to add one thing to the FOMC. It would surprise me if he would be either overly hawkish or dovish. I think at this point in time, especially with the geopolitics, unstable situation, unclear possible implications on the CPI print, I think it's the last thing he should need to have a kind of to say something that's gonna destabilize the markets, right?
Yeah.
Or that makes like that. So I think it's in his best interest to keep the markets as stable as possible, maybe even as bullish as possible. Kind of. I mean, he was chosen by Trump, so I can imagine that there's a hidden hand behind behind him.
Hidden hand, or is it hidden, or because we all know
the obvious side of things, right? Yeah, no. So, but I think that Walsh has to be extremely careful what he will say, because all the algorithms, all the traders on the Wall Street, they will really closely watch every single word of him. And yeah, okay, guys, let's dive into the markets themselves. Let's start with Nasdaq. So, what happened? Our gap is still in place.
Oh, but we got so close.
We got so close. Actually, wait, let me quickly. Can I?
No, it was actually an intense sell-off the other day.
I want to delete this.
Yeah, like it was. I was very surprised by the price action, but then again, we almost covered that entire bullish candle to the downside. It was
so it was like, I mean, we took out the high, obviously, right, and then we went the whole day into a sell-off into a correction territory. So where we are now, I would say this is our, we have the gap between 30 to 100, and everything in between is currently a value area. So for me, that's range territory, right? What we want to see is basically a clear reaction either to the upside or to the downside. If we are going down, next target would be a gap close, and obviously if you go up, then it's stabilization and then continuation to the top side. For the time being, it's an inside bar, inside day, but I think everyone is waiting for the FOMC needs to hit, and then we should see some momentum plays. And yeah, ES. One second. Select this. ES, similar game, right? Not as aggressive as Nasdaq, but I mean, actually, I mean, S&P looks much more weaker to me than much weaker than NQ. But again, it's markets are waiting, right? Markets are waiting for the signal that something can happen. All right, Dow. Nothing happened. Russell. Actually, it is interesting. In Russell, we made it's an outside day. It's an outside day. So outside day.
So can you explain that? Like, what is an outside day?
The outside day is basically if you have one candle that completely covers the big one. And if this happens, like in candle analysis, if this happens at extremes, then many times it signals that a continuation, as like basically a reversal of the trend. Yeah. So if the trend up to here has been upwards, and we see like a reversal pattern on it's a reversal pattern, right? It's just a change of trend in pure candlesticks analysis. So be aware of those, because if Russell starts to collapse to the downside, this might have implications on the remainder on the other markets, right? So as we always say, follow the clues of the correlated markets, because many times they might drag along other markets with it. But I think Steve will talk later a little bit about this. Gold, inside bar yesterday. Inside bar is basically the opposite of an outside bar. It showcases that it's a range building prior to usually a big day. And the theory is as follows, that if the current trend breaks out of the previous day intraday bar, then it goes in either direction. So this is how I would watch basically candlestick analysis at this point. And we are still sitting at our prior resistance, right? So we had the support area here become resistance. Actually, maybe I need to correct this one a little bit like this. So yeah, I always used to joke, it's trading is art, not science. So don't take areas for don't consider the areas on tick-wise or point-wise base. It's more an area, right? So we're talking about 20, 30, 50 points, and not like, all right, it's 1 point, and then if it doesn't, it's hit or lose. Doesn't work this way. Silver, similar picture as gold, sitting underneath our resistance. So also waiting for, I mean, currently it looks like it might be a reaction, actually, for me. Then the target could be here, gap close, and this gap close is much further away, and then at this point it's also a support area. So let's see what happens there. But as long as the resistance is not hit, it's not a big scenario in my eye to play upon. Oil, yesterday big sell-off, almost 6%. Next target has been $3, $2.50 deeper, but we didn't hit it. So let's see. Might be a good consolidation play. Wait for the pullback.
And Henry, just quickly, just letting you know, yeah, we just have the retail sales coming out right now. Not too much of a reaction, no surprise, but just I want to let everyone know retail sales came out. Core retail sales expectation was, forecast was 0.6, actual came out 0.8, so higher than expected. So far, we're getting a little bit of bullish push momentum, so just want to let anyone know. Some news coming out, and now Nasdaq is grinding higher right now. So quick update.
Okay, thank you. Yeah, it's basically on an intraday chart, 5-minute chart. It's basically on we broke the trend line here at this point. So, and as you could have as you can see here, we already broke it a couple of minutes prior to the news, right? So the indication has been already there before the news hit. It actually happens many times. It's the same with our FOMC. That many times prior to the FOMC, some people know some people who know some people, and they already can pre-position themselves. So actually on FOMC, I can show you, I think, what happens many times, or also CPI print and FP. Many times, let's say you get a sell-off, for example, prior to the news, and then you have a consolidation, and many people think like, oh, it's a bearish pattern, it's a continuation pattern, but on those big days, news events, that's actually a reversal pattern. So be aware, of this, because many times the big guys short here, close the position, reverse the position, and now I can say retail is basically thinking like, oh, it's a continuation pattern to the long side, to the short side, but no, they basically reverse it, right? And then it hits them hard because then everyone starts to cover, and former people are starting to run in, and then you get this big impulse, and same for the other way around, right?
Yeah, people forget. Yeah, when you have those sharp reversals, it's not so much because the market is buying; it's because large short positions are closing.
Yeah.
So then no one, in a way, you think about it, like, then no one really is selling anymore. So like the buy pressure is always like constant. Think about that. Like the buy pressure, liquidity is always constant. Oh, and it just all depends if they start selling or not. And that's why people are saying, like, once we had that huge squeeze to the upside on NASDAQ for a couple of weeks, no one was selling because it was bullish sentiment.
I think many times people actually forget how the markets work, right? That you always need two sides, buying and selling. So you always need two sides of the equation to make it work. And if big news are coming in, then many times there's nothing happens on both sides, and then you have a huge equilibrium of nothing happened. And then if you hit the market and there might be nothing, then you get this big gaps, right? White gaps, white spaces, and then the market just keeps on popping till he finds a space where sellers and buyers find equilibrium, and this is how you get those huge candles. But there's actually not much volume behind, because in the first couple of seconds or milliseconds, the algorithm and everyone needs to figure out what's going on. Needs to go through the news, to the implications, right? And I don't trade during FOMC as well. Like if I used to trade when I've been trading full time. I used to trade the initial impact of when the number came out, but only for a move, right? Like 50, 100 points for the initial move, and then I obviously waited for the press conference, and then I'll only trade it after the press conference, because the press conference itself is usually like a back and forth fighting, right? It's just like, all right, short, long, because all the algorithms, all the algo traders, and everyone on Reuters, Bloomberg, Squawk, Live Squawk is basically pushing it one side to another. Okay, so where we talked about oil, okay, so we have this here. Let's take a look at wicks. Still compressing, triple Qs. I mean, it actually looks much more dramatic on triple Qs even than it does on NASDAQ itself. So yeah, but we were not able to finish to close the gap. SPY still open. SpaceX. Yeah, I mean, we talked about it yesterday, right? It's most probably going to be a continuation, and it was still running up higher. Maybe some news for some guys out there who have missed it. So SpaceX is basically about to buy. No, I'm sorry. No, I'm confusing this. Is it Codex or is it Cursor? It's Cursor, right? Yeah, because
Yeah,
Cortex is
Cursor.
from ChatGPT. Yeah, so about to buy Cursor for over 60 billion, and I mean, it's a smart play, right? You have he basically will pay nothing because it's because SpaceX itself grew over 50% since the IPO. So it's
Yeah, but that was the whole plan to get that's what Elon does. He sells the idea, he gets unlimited funding, he starts buying out these companies, these ideas, these smart people, basically the smart people around the world, puts them on his team, shields them under Elon, and then that's how he grows. It's genius.
I mean, many people have been arguing about his acquisition of Twitter, right? Like, hey, he overpaid and blah blah blah. But by the end of the day, X is one of the biggest social media platforms, right? It's one of the big top 3, top 4, and it's actually the only platform where every politician of the world, every corporation, all the CEOs, it's like a announcement space, like right,
Yeah.
like a blackboard where people can announce stuff. So it's and
it's
so
number one, whether you like it or not. When anything to do with Wall Street, markets, finance, X is number one for news, for chit chat, and that's
I
why
think
we're always posting on there as well.
And I think this is what many people don't understand, right? That there's actually no price tag to it. And so if you could also say that it's yes, it was much more than he could have paid, but it's still cheap in comparison. If you take a look, that sometimes they're paying like 60, 80 billion for a news outlet, right? That is basically dying and has a declining viewerships, and they're still paying 60, 80 billion for it than getting X. And it's a much better deal in my opinion. So yeah, guys, basically SpaceX going up higher, so nothing bad happened there. Apple, sorry, let me quickly see what our big stocks, the big Mac 7, Mac 8 are doing. Yeah, I would say it's neutral. So yeah, we will see. The big news, I think nobody knows how the market will play out. So be cautious, be careful, wait for the news to hit. Don't make assumptions, because with those kind of news, it's gambling. To be honest, it's gambling. And if you have a stop loss, it doesn't mean anything, because if there's no price, then you have no guarantee that your stop loss is going to be hit. If you have a stop loss of 30 points and there's no price nowhere near to it, then you can your position could easily be executed with 150 points further away, and then you just blow up your account if you don't have a proper risk management in place.
So because it's the futures market and it's more liquid than, let's say, compared to CFD market, would you say if, let's say, for example, some traders put on some orders, they don't listen to anyone, they want to gamble at eval or whatnot, or God forbid, a funded account, would you say their stop loss has a chance to get slipped during the FOMC?
Yeah, they will definitely get slippage. I mean, it's
because people think, oh, futures market's liquid enough, my stop is there, 10, 15 points.
Yes, no idea. It means nothing. It means nothing. It's and there's no guarantee, right? I mean, if you have a real funded account, like a real your own account, let's say with a big brokerage firm, you don't trade on the prop side, but you trade by yourself, and you have an account, you're actually responsible. You need to read the fine print. You're actually responsible for any excess in negative P&L. If you blew your account and then it completely blows through, then you need to transfer them over some more money in order to cover the loss for the prop firm. So there's no guarantee. If you want really, like, if you want to play it really, really safe and you don't want to have any excess risk, then you need to trade options.
Options, yeah.
Because then it's as long as you don't sell calls and you don't protect those, then you should be good to go. But
and those are DT.
Yeah, no, but again, guys, with futures, if you have a stop loss during FOMC and CPI and other big news that are coming up, don't be sure that you get this price. As I told in another call, I think my biggest slippage has been at around, I don't say, I don't know, like 100 points or something, plus minus, and the market just kept on going. So I was actually lucky to get out, because many times it just keeps on going. And the problem with this whole thing is, it's not about how much you lose, it's about what it means mentally for you, because many times it like there's this expression, the freeze, right? The trading freeze, and that's actually real. So if you wanted to risk $1,000, but now you're looking at $10,000 or $5,000 risk, you're basically like, oh shit, what do? I just want to do 1,000. Oh, now my account is so further down. Okay, I need to decide: do I sell? Do I wait for a pullback? Oh no, it's gone too far, too fast. I wait for a pullback, but then the pullback doesn't come. Then the market keeps on rallying. You're down 10,000. Like, oh no, oh wait, okay, market is down to 7,000. Okay, please come back to 5,000, and I close with -5. Market rally is to -12, like to 12, 13,000 minus, and you're like, oh shit, please give me back the 10,000. But it's just a straight line up. Yeah. And this is called the freeze, right? And so you never want to put yourself into those kind of situations. So therefore, the stop losses are important, because even though you might lose more than you thought, but at least it gets you out of the market, gets you out of the situation. So then you can step back, re-evaluate the whole situation, and then maybe just finding on a small time frame, 1 minute, 3 minutes, 2 minutes, 5 minutes time frame range, a little consolidation, and then keep on taking a position that actually and with the trend, and then making some money of it, right? Instead of staying with the trend that is clearly against you, but you're frozen because you don't know what to do. And this is, I think, the biggest misconception that people have about not understanding the value of the risk. That it's not only doesn't not only protect your account, but it actually also frees you mentally to keep on trading.
Yeah, like risk should be the first thing you should be focused on, and you should be comfortable where that line is, where that price level is I'm not moving it, because if you move it, then you're relying on the one word that I hear all the time is hopium, is hope, and then you start averaging in, and you're hoping, please get back to my break even, please, even when it gets back to break even, I've seen this so many times, and I've done this in the past too, where you get greedy and you're like, okay, I want to make, now that I got back to break even, I want to make some profit. And so many times it just reverses, continues the trend against your bias, and would have already hit your stop, but then you end up blowing your account. And if you copy trade, then you blow 20 accounts. But we've seen it all in the prop game. And today, FOMC, everyone signals it. Everyone, of course, is going to be shouting it on X, online, but on purpose, because this can be one of the most dangerous days. And I know some traders where they skip this day entirely, even prior to FOMC, because they know human emotion, they know themselves. And once the volatility kicks in, Henry, they're like, oh, I'm going to miss the opportunity. But then you're also going to, have the risk of blowing.
I mean, there's no right or wrong, right, in trading. You need to know yourself. You need to know your strengths and weaknesses. So, for example, for myself, I didn't really care, but I know some guys who were big traders. They either didn't trade big news, or they only traded the big news. So they did not trade anything in between. They were basically just hanging around, maybe scalping with small size here and there if they saw an opportunity, but they were basically just around in full focus mode when big news hit, right? Or if there was a big level that everyone approached. And I think there's no right or wrong. It's basically understand your strategy, understand your needs, understand your edge. And all right, let's shift gears. Let's move to market correlation. Let's see what's going on there.
Yeah, let's get into the levels, you guys. Yeah, we talked about the Fed chair, the meeting coming up, whether it's going to be, some new fireworks, people are going to be looking at his tone, the volatility. For myself, I'm just going to be observing that after the fact, probably not live, look at the comments on X, look at the news afterwards, see what really happened, but no stress on my end. I've been through enough FOMCs in my time, same with Henry, where, it's nothing new. It's more exciting to just possibly observe it after the fact and be done with it and move on to the next day. So yeah, a lot of people will be betting on. Actually, no. I was actually wondering too, because we know Kalashi poly markets out. Do you think there's going to be some bets, Henry, on poly market?
Definitely.
With his tone and how he presents himself.
I mean, actually, while you do your correlation, I can take a look.
Yeah, just out of curiosity, because that is the trend right now. Like, the poly market, the betting system. We don't know how long the regulators will be allowing this platform to go on, but while it's still on and legal, we might as well talk about it. Since
I can tell you there will be no changes during the Trump administration.
Yeah,
there's one thing I know for sure, and that is that there will be definitely no changes during the Trump administration.
Yeah, the money will flow, and whatever happens after, that's, in my opinion, the most unclear of what's really going to happen after his administration is finished. Yeah, let's get into it, my friends. This is before the bell. Let's identify some key impulse levels, some major support resistant areas. Now looking at NASDAQ, and then we can move on to the other assets. Any risk zones before the bell at 9:30, which is coming up in about 40 minutes. We just had some news. We had retail sales come in, core retail sales, also some G7 meetings. But because there has been a little shift in markets, it's holding this level. It's right before New York Open. This will be my bias line for the day, unless before the bell we get any new headline risk, any news about the ceasefire, whether it's on or off, war news, anything affecting oil, anything really, will increase the volatility in the average true range on NASDAQ and other indices right before the bell. But this is the level I focus on. This is my bias area. If it's also going to be hanging around closely where New York Open is, then I'm just going to mark it out as New York Open, be my bias level of the day, because as we all know, that's when the explosion of liquidity enters the market. So it's very important. And that's how I batch out my levels. But for now, as you can see on my list, currently NASDAQ is the strongest. You can also see NASDAQ up over 0.5%. But I also dive into the ratios, which I'll get into later, and also a quick recap of my trades the other day. But soon I will, speaking with Henry, I will also have a quick section later in the streams of my trade recaps, how I measured it, how I looked at the ratios to put on my risk, which areas I was looking to. But yeah, soon I'll show you guys a recap of my trades with my Purdia account, because the focus is here, of course, Purdia Capital, how we measure our risk on the funded accounts and how you can reach to those payouts. So any question you guys have on Purdia and the journey to the payout stage, let us know, and let Henry know. Henry's the perfect guy to answer those questions too. So
I hope so.
So this is your time.
I hope so.
Any questions, prop firm related, Purdia related, Henry's your man. So take the opportunity. So yeah, let's get into it, my friends. Market mood so far is neutral, I would say. Pre-market, no surprise. FOMC day, not much volatility going on. In the pre-market session, I have the news level labeled 30,463. This is also in line with yesterday's daily close. Lots of chop in this area, lots of volume. We extended further towards the end of the day, came back up, retook it with some news. And of course, we have my beautiful gap level right below. Still hasn't been touched. So, but because look how many points we came from it. This actually happened in the Asian market right around, because we came around up 70 points, 30%, a third of a percentage. The probability of us closing, I'm not saying it has to close today, but because today is FOMC, the probability of us closing near either FOMC or another extreme volatile day is definitely there, since we reached so close towards the gap. That still remains as one of my risk areas, one of my risk levels. Now let's measure the move and see where price can potentially go to the upside if we continue the bullish formation. So let's just measure This area here, gap is still down below 30,191. Measured above. And where is that going to take us? That will take us right around the New York Open. Yeah, it's not rocket science, you guys, but this usually matches to New York Open to New York Open so often. And I swear I didn't make these measurements beforehand. I'm always doing this live with you guys because I like to surprise myself so often. And where is the measured move lining up? Right around here. 30,750. And look what happened here previously where we had a lot of consolidation. Price didn't want to break out. This was also New York Open for Monday. Acted as support a few times later in the day. Pushed on Tuesday. Came back down this week on Tuesday. I wouldn't say there was much support, but it still acted as an important area. Support now turned into resistance, and now that's the new measured move that we're looking at for today as resistance. Do we tap into it pre-FOMC, post-FOMC? We have no idea, my friends. This is why we wait. For our setups that are high probability, I always stick to one, let it play out. Sometimes I can hold as long as... You know what? Actually, if we were doing the trade recap, I would have shown you guys my trade from yesterday. I held longer than usual, about 2.5 hours. But I've also held positions as short as like 5-10 minutes when it goes directly into my favor, and I just start cutting it right away because it's already met my 1-to-1, sometimes even 1.5 to 1. But if it meets my 1.5 to 1, then I'm taking profit right away, securing my position. But yeah, anyways, we can get into that recap later and how I use the ratios. But yeah,
maybe just to add one thing, I think that's also the biggest misconception, right? That by the end of the day, we're here to make money. We're here to become a consistent traders. Like, you need to be consistent in order to be a successful trader, and it's not about being right. It's basically having an idea. But if the market presents you the opportunity and it just goes your way really, really hard, and you're like, oh, all right, why should I risking it, giving it all back with a pullback if I'm already like 80% there where I want to be? Let's say you have a target of 100 points and the market gives you 80 points in 5 minutes. And you're like, hey, all right, from here on, I either win big or I lose, right? And then you can say, maybe, hey, it's Tuesday, it's Wednesday. Let's take the 80% in 5 minutes and call it a day, right? So you can do something else. You can go out, make sports, spend time with your family, whatever.
Yeah, and that's the point, because we don't want to be slaves to the market. We don't want to be stuck in the mud. Because I've been there before, where all day I'm looking at the charts. I made my profit, lost it, third setup, lose again, and I want to make it back, and I double down. And that's the whole point, is we must accept what the market gives us, be done with it, close it, go back to either your 9-to-5 or other projects you're working on. If you're self-employed, look to other, businesses. Of course, Henry, he's up there. He's our main guy at one of our main guys at like Purdia. He's a top man, top chief, I would say, but but also he's a leader in the space because he's been involved for so long, and he's always working on things as well. And that's why he's presenting this stream for you guys for educational purposes, but also because he has so much knowledge in the markets. This is why I'm here as well. I haven't been in the market as long as Henry, but I feel like I have some knowledge which I can give and help you guys, because everyone's always asking for some support. And, the stream has been one of the best indicators to provide that for the people. And, I also have my newsletter. I help people out. It's completely free. So, if you guys want to tune in, let me know. And yeah, the point is that once I'm finished trading the markets, I have other things to work on. Henry has other things to work on as well. That's the whole point.
All the time. No, but I think I have, like, from what I'm seeing, and also from trading with all kind of traders all over the place and almost every day, that it's basically what you're saying. People are quitting their jobs. People are completely committing to trading, and then they trade for 12 hours. And the problem with trading is it's super easy to click sell and buy, right? Buy and sell, whatever. But it's not the point of trading. You don't trade for the purpose of trading. You trade in order to make money by the end of the day, to get your points. And for me personally, I always trade the best if I had a clear target for the month, for the week, for the day. And it doesn't mean that I'm, for example, let's say I have a target 50 points per day, right? I knew like, all right, I want to lose 50, I want to make 50. And so let's say in terms of dollars, let's say it's maybe in points it's easier. Let's say I just want to risk 50 points, but I also want to make at least 50 points, so 1-on-1, right? My ideal scenario is always 2-to-1 and more, but let's say 1-on-1 is my minimum scenario. So if the market is giving me 80 points in 5 minutes, I'm closing it, because then I'm already on a ratio 1.6-to-1, right? And then I can either decide, all right, I fulfilled my minimum goal, my minimum target, and now from there, everything I do above is a win, or I just quit it, depending on how I'm feeling, how the stations, what kind of day of the week it is, and so on. But I always think that having a target for the day, for the week, is always a good thing. And the biggest misconception is that people are saying like, yeah, Henry, but you cannot force the market to give you the points. I'm like, no, they can't. But the market moves all day long in zigzags, and it provides you with infinite opportunities, but you cannot trade every opportunity. You need to trade for your setups, and having a target actually helps you with the execution of only of your best setups, because then you're forcing yourself only to trade the best setups and not trade every zigzag, but basically you either waiting for the big impulse, waiting for the news, waiting for the big levels, waiting for the big picture setups to play out, and not just randomly going in and out because of boredom. And this is what I think people completely underestimating the amount of willpower they need, and the amount of it's called decision fatigue. This is that you're getting tired. The more you execute, the more your willpower goes down, and the more fatigue you get in making decisions. Yeah. And if you cut yourself on like making 50, 100 points, whatever it is, even 20 points per day, depending on your risk profile, you're basically protecting yourself from burning through. And this is what I'm seeing all the time. Guys are quitting their jobs, getting a couple of payouts, and then they, instead of working 40 hours on their full-time job, they're now working 80 hours in trading, and they're completely burning through. But it's a long-term game, right? It's not something you should be proud of, because actually I'm quite like, I would bet anyone who tells me that if he trades 80 hours, he makes more money than he would only make if he would trade 40 hours. I would bet every time against anyone who would sell this. In my personal opinion, I think that if you trade less, you make much more money than instead of trading from the morning to the night.
Yeah. Like it's humanly impossible, because your peak concentration of focus only lasts about an hour or two. And after that second hour, a couple coffees, that's it, you're finished. That's why for me, I can't be involved in the markets that long. Like, but once I'm involved, I always prepare myself, like physically, mentally as well, and I exercise, I do other things, because you have to, because it's the effect that the market can do to your brain mentally is it's so draining. And if you don't involve yourself in other things to replenish, to reset, to refresh, it doesn't have to be like gym. It could be like other things, go out in nature, go for a hike, go for a swim, do other things to keep your mind occupied that you also enjoy, that makes you happy. Because I guarantee you, most people that trade are not happy when they trade. It can be a very stressful profession. You're not enjoying putting on risk. You maybe enjoy afterwards, once you accomplished what you want to accomplish. It's nice, you release it, and then you can move on. But like while you're putting on risk, I don't know anyone that say that, I love it, it's so enjoyable,
I think the problem is let me show it. I think the biggest problem is what the people have is the following. Let's say if you only go for 10 to 20 points, right? And currently in NASDAQ, it's basically 1 2 minutes, 5 minutes max, right? In terms of volatility, because the market is so volatile. So if you only go for the scalps, I actually think you can sustain a much longer period of work, because you are not biased to the market. you're basically just trading along with like levels or breakouts or false breakouts, whatsoever. So you're basically all over the play. You are short, you're long, you're short, you're long. So this is fine. But what, from my observations, what really gets complicated for the people is if they're involved in bigger trades, let's say 50 to 100 points. Why? Well, because the market circulates, right? It's a zigzag. Zig comes back, and all this mental coming back and forth between hope and fear is basically what drains the energy. As let's say you have a target of 100 points and the market is already there, 75 points, and you have been waiting for 3 hours.
Yeah.
This kills you, right? You're getting really like it's really tired. It's really makes you tired, right? And also frustrates you because then he comes back maybe at break even, and maybe you're like, oh shit, I have to move my position to the break-even point. Even worse, you might reverse it to the long side and getting screwed there. Then the market goes in your favor. You go long, short again, and then it goes, but it doesn't go the whole way back. And so basically, you spend the whole day in this range going between hope and fear. And I think this is the biggest thing that people need to understand, that how you make money is actually through a crystal clear execution of your setups and of having crystal clear goals, what you want to achieve. And if you have a system in place and the system tells you 50 points, you quit the day, or it tells you 50 points and you don't let it get back, like let's say 50 points, and then you have one more trade with a risk of 20 points. And that's it. So you close the day with 30. And those are the people I know who are really able to be a consistent, profitable traders because they have the system in place. Then we're not talking about any kind of, what's the setup? Is it ICT? Is it price action? Is it algo? Is it whatever? It's basically, it doesn't matter, because by the end of the day, you can make money. You can lose and make money on both sides from each of the strategies. It's more about the whole mental mind game.
Yeah. And they're probably readjusting each day because each day is going to present either, more points or less points.
Yeah.
So what I do is I measure a lot of times, not the biggest candle, but let's say the average 15-minute candle. So yesterday, the average 15-minute candle was around, right after that big initial spike, was around, let's say, right here, 78 points. So the probability for NASDAQ, or let's say 80 points. So the probability of NASDAQ to go another 80 points is quite high, whether you're to the long side or to the downside. So for me, let's say I took a short idea and I see the average measured move is 80 points, and for the trend to continue, that's my take profit at 80 points. Did it go a lot more than 80 points? Of course. But on, let's say, a different day where the similar setup comes, it could have stopped at 80 to 85 points and then reversed on some sort of news that came out. So I don't care that it got more. I close it down. That's my mindset. I clear my mind. I refresh. Sure, it would have been nice to hold on. But the average measured move was 80 points intraday. That's why we're showing you guys like pre-market, the measured move, what could happen. And if we do continue right now, the buy slide is at 30,463. And if we continue the price action above, sure, we can meet the top side of the range, but we don't have to. This is just an idea to give you guys. Because if, let's say, volatility starts to shrink before FOMC, and we just grind higher, I'm closing my position because, I'm not risking my entry before FOMC, because FOMC, if we have some surprise, it melts down, boom, we close the gap. No, the market doesn't like the tone of the new Fed chair. Boom, we close some more gaps to the downside. we don't know what's going to go on. If Henry and I were a betting man, I could see the market giving us extra juice because what happened last FOMC? Nothing happened. Jerome Powell's we're messaging each other saying, man, what a entertaining, because we're observers, of course, what happens with the comments. It was his last podium, his last stage, and nothing happened. There was more volatility in the pre-market session than there was on the actual FOMC. How uneventful it was, Henry, you remember. But with the new Fed chair coming on, I can see us expanding 3, 4, 5 times. So it's going to be a fun show to watch.
Yeah, I think that's also a little bit what you get through a lot of screen time, that you get a feeling for when to expect volatility, right?
Yeah.
And even though if it might be a quiet event, but like always watch the price, and the price will dictate you what's going on. So if you have a pattern, and even though the event itself has been quiet, but the pattern breaks, it's a like continuation pattern, it's a reversal pattern, whatever, then this is an indication, all right, the price wants to go this way, just go with the flow, right? And
exactly.
obviously the big momentum plays are playing out if either the market gets its confirmation or it gets or it goes the other way around, right? There's obviously the surprises. Then never fight the trend, because usually the impulse after those kind of events is so strong, so it doesn't make sense to fight those.
But that's human nature. So many times is they want to fight it because they feel like because it shoots up so high or goes down. So like yesterday we had just full sell off on Nasdaq. It couldn't bounce on any level. And imagine how many people just kept wanting to buy, because they zoom out a little bit, like, oh, this level should hold. But then you look at these levels. This is all pre-market. Why would these areas hold? This is all pre-market, you guys. There was no volume traded in this area. So think about it. So for me, it didn't surprise me why we kept falling all the way till New York, or the close of New York, because there's no real demand. Why should prices hold during the Asian session? But anyway, this is my opinion. But yeah,
I mean, we can wait. Let me show quickly. I think what we could also demonstrate along the way, and guys, if you're interested in those kind of things, let us know. Give us a like and leave us a comment if you want to hear more about those kind of things. Then we can talk in more detail about those. The biggest issue what people do is, let's say the market goes down, right? And they have a level here. So they blindly buy into this level without any confirmation. And what you usually should do, let's say if you trade 3 contracts, you should only use 1/3 of your size, or maximum 1/2 of your size. But no, people are either using the full size or even more, because they're like, yeah, it's bounces there, and then I'm leveraged. I make a quick buck, right? But then the market keeps on collapsing, and you lose a lot of money. So the smart players, the smart money, does the following: market goes down, has a range, it gives you a clear sign. You just need to wait. But people don't wait, because like, oh yeah, but if I am buying here after the breakout of the zone, it's like already 30-40% from the lows, like 30-40% high points higher from the lows, right? Like, yeah, and so what? But then your probability shoots up. Your probability goes from, let's say, I don't know, 30%, it goes up to 60%. And it's like, do your own testing. I'm just making up some numbers. But this is how you need to think. You need to think like, all right, what do I want? Do I want to be right and just catch the low and then showcase it on social media? Or do I want to make money? And if you want to make money, if you want to become consistent, then you need to wait for the market for the confirmation. And this is how you do it. You really wait for the market to make, let me quickly make another color here. You want the market to showcase you a little range on a small time frame, 1 minute, 5 minute, whatever, 3 minute time frame, and then it either goes down or it goes up. If it goes up and you had this support area here, then you know, all right, support area might have worked. It might be a reversal pattern, but then you have the confirmation. If it goes down, all right, support area might not hold. We might go down, right? And this is how you should trade. But no, people always try to get, we call it front end. They always want to front run the reaction, but actually the smart money is always waiting for the market to play out and then go on the actual, being more passive, less aggressive.
Even the market makers, they wait for the reaction as well. No one truly knows if that level is going to hold. Yeah. No one knows until the time comes. It consolidates, and of course, they have majority of the data. They can see the real order flow. They can see the real volume, but they wait. They're not going to just blindly enter. So stop being a blind trader, basically.
Yeah, kind of. I mean, so blind. I think the big issue is that many are trading without having backtested their strategy itself. I see it all the time with the whole ICT traders, right? Like, yeah, I'm using this setup, I'm using this setup, I'm using this, and I'm using this setup from ICT, and the only thing in my mind, I could not care less. But did you actually back tested the setup? Did you back tested the strategy? Does it work? When does it work? What's the probability? What's the expectancy? What's the win rate? What's the drawdown? Did you actually tested any of those setups? No, most of the people don't. They just blindly follow the setup and without having done any kind of backtest.
Yeah, and the keyword is when, because there's market shifts, there's market movements that differentiate each time of day, each time of quarter. You could say with every passing of earnings and Fed news, but this is why for me myself, I always found my edge, my setup is much more clear after the first 30 minutes. Let all the news clear out, economic front, and whatever comes after. If these we have any surprise headlines, all I can do is set my stop loss and protect myself. But so far for today, we're seeing minimal. Let's say minimal, but yeah, so far on my market ranking, Nasdaq is first, the clear winner, the clearing strength. In the asset rotation, I have my bias line. So far, we have bullish momentum. It's not much, but I'm not blindly entering before New York Open. New York Open, all that could change. But for now, as long as price stays above this level, so far we got the test. And let's see if we get the break. New York opens, wherever it gives us the signal. I want to see how price reacts from it, how the volume reacts from it. I'm going to be staying patient. I'm never in a rush. I'm always calm and easy. I used to try and trade the pre-market. I used to trade right before New York Open, trying to get, the best discounted price, trading blindly. But, I'm not trading blind anymore. I'm with you guys. Soon I'll be showcasing my recaps on my Purdia accounts. But yeah, for now, as I'm seeing on the ratios, everything seems to be rotating into NASDAQ. This is NQ against ES, Dow Jones, and RY. And as you can see on the ratios, everything is painting a clear and strong picture into NASDAQ. So what is that telling me? If I'm looking for any long ideas, it would be NASDAQ only. Any short ideas, I would say the three of them are pretty neutral. For now, like YM, based on the ratio, when I zoom out, already closed its gap, is one of the weakest for now. But then again, that ranking,
I would say today with the big upcoming news, it doesn't really matter, right? It's like in front. Yeah. It's like in front of the NFPs or CPIs. It's basically matters nothing. It's all about the actual number, the actual news impulse.
Yeah,
and
exactly.
Then from there you will see what happens. So yeah. I think the same. Like I have an opinion, but it's like it's guessing, right?
Yeah.
We don't know.
Yeah, that's why you're not seeing too much of a spread between the assets, because they on big days like this usually move very similarly. And that's why I would say with Russell, ES, and Dow Jones, they're neutral so far. Nasdaq is leading the way, but leading into FOMC, they're all most likely. I can tell you right now, they are most likely for the last hour before FOMC, they're going to trend very similarly. The candlesticks, the rotation.
I think there's one thing to I think. Wait, let me quickly turn this off. I think there's one thing to consider. On Friday, supposed to be the official MOU signing, right? And Switzerland, or however they want finally to finalize this whole thing.
Yeah, I was going to ask you about that. What that
is. Friday is actually also a holiday, so the markets are closed. So therefore, no live stream on Friday. So that means that either today or tomorrow, most likely, we will see some risk off. People de-risking, taking profits, repositioning, whatsoever. So be aware of those scenarios, right? For Friday close, Friday big news upcoming, long weekend. So people will either pre-position themselves beforehand or like reshift their position, rebalance their portfolios. So be aware of those scenarios, because many times those kind of things leading to a really strong trend days, because there's so much money involved. Because we're not talking here about retail, we're talking about some big deep pockets. And yeah, all right, guys, let's. I finish the stream. I wish you all happy trading. Trade carefully. Always think about risk and proper position sizing first.
Yeah.
Do me a favor, don't follow blindly anyone, and always do your own thinking. And yeah, have
Yeah,
a good
thank you,
day.
Yeah, stay
Yeah.
patient, risk small. It's FOMC. Trust your plan, trust your process. You can even drop your plan in the chat. We're going to reply. We can connect my friends, never trade alone. So yeah, thank you, everyone.
If you have any comments, write them below. Otherwise, follow the channel so you get notified once we are going live. And if you want to follow Steve or Purdia or myself, then you can find the links in the description down below. Otherwise, wish you all a good day of trading, and see you tomorrow. Cheers.